go through some questions today, and hopefully by the end of the show, we'll be able to get to some of the audience questions. So, the first question I have is, it seems like every cycle we have another few thousand cryptocurrencies to talk about. I'm curious, in the future, do you think this is what the future is, where there's just constantly, thousands of different cryptocurrencies, or even hundreds? Or do you think it'll be sort of whittled down to just a few, like say 10 or 20 years from now? I'm trying to think like, is it more likely to have a few, or is it more likely where a lot of different institutions have their own sort of like native cryptocurrency that they use? I'm curious what you guys think. Rob, what do you think about this one?
Ooh, this is going to be a little bit dicey, but it comes down to this. Like when I hear everybody talk about, the different cryptos, first of all, let's be honest, we don't need 1,000 cryptos. That's ridiculous. Most of them are, let's be honest, most of them are worthless. Most of them are worthless. And you can't tell me a meme coin is going to do anything and save the world. It's not. It's just a big pump, and then who knows what's going to happen, and you're gambling. So let's just get that out of the way, first of all. But the second thing I always heard of, which was mostly from the people in the Bitcoin camp, which was Bitcoin is not just a medium of exchange. It's not just store of value. It's going to be the methodology of which everything's going to be built upon. It's going to be like the TCP IP layer for the internet. And everybody's going to build on that. It's going to be a layer 2 solution, which is funny because they get really ticked off when anything builds on top of that, like an ordinal or like a Stacks or something like that, but whatever. So I'm not a developer, obviously, but I had to take a look at that. And people will say, well, that's just a layer. But if you take a look at TCP IP, I'm looking at it right now because I can't remember this information. But TCP, the transmission control protocol, it's data delivery by breaking information to packets. IP is internet protocol, routing data packets across networks, but that's not it. There's a third, fourth, and fifth. There's one called UDP, User Datagram Protocol, which prioritizes speed over reliability, making it suitable for time-sensitive applications like what you're watching right now, which is streaming video. So when they talk about this protocol layer, they're like, well, this is all you really need. Even the internet needs other things. And then just to kind of break this down as far as like you don't really know where you're going until you know where you've been. If we take a look at, I'm just going to share this, Ben, real quick, which is like Web 1 versus Web 2 versus Web 3 and where we came from. See, I'm old, and I remember this stuff. The first website, this was what a website looked like in 91. So when we take a look at Web 1 versus Web 2 versus Web 3, Web 1 is read, which is all you could do is read this stuff. And they were intranets. They were connected. They weren't connected. They were just these big businesses like the Microsofts of the world that would do that to pass along information to their employees or put out information. Then they figured out, you know what? We probably should kind of open things up. So again, Web 1 is just read. Here's Microsoft, their stuff. Web 2, then now, of course, you can read and write. And AOL figured it out first. And if you're old like me, you remember actually getting this CD when people had CDs. And then you'd be able to like put things in and search for things and things. That's read and write. And people figured out, okay, we don't have an intranet. We need to connect because that's how everything's going to grow. So when people talk about it's only going to be within this little ecosystem like a JP Morgan with their Onyx, that's not how it's going to work. It's going to be open and interoperable to actually make things grow. So that's Web 1, Web 2, and Web 3 is read, write, and own. And that's what OpenSea and stuff and all the different gaming products are that are coming out. So when I think of it, I think it's only going to be like one protocol or 2 or 3 different cryptos. I don't think so. And we can look at, here's some examples. I'm not a programmer, but this is a great YouTube channel. It's called Data is Beautiful. Again, if you're a programmer, these were the most popular programs in the 60s. Crazy. 70s. This is 80s. This is 88. What do you notice? Everything changes. Here's 1995. But you notice that like at some point like C and C++ and then Java becomes this like juggernaut and stays there for quite some time. And people are like, well, that's it. It's just Java. But as we move forward, well, now it's Python. And that's just one section. We take a look at operating systems, the same thing. Look at this, Windows 98, 95. If you're old, you know what I'm talking about. And of course, Microsoft. I don't know what Symbian OS is. 2010, Windows 7, Android, Windows 7, Android. But look at this. And this is when the internet first came out, people just thought that it would just be one website. This is in 96. These are the most popular websites out there. We thought it would just be 1 or 2 or 3 different websites to do everything. And now that's ridiculous. Look at this. AOL again being the big one. Yahoo came out, and then Google, Yahoo, Google, Facebook. So yeah, there's going to be like a one that kind of makes a big play and does things fantastic. But there's always going to be room for other ones. And this, of course, is social media networks. And we can see that Facebook being a juggernaut, but look at YouTube's catching up, and then whatever the heck Q-Zone is. Instagram, Twitter, Snapchat, Pinterest, Twitter, which is now called X. So again, just to summarize, I don't think that it's just going to be a one-size-take-all and we're all going to have this one thing. I think there's multiple different layers and things that can actually be done because there's so many things that blockchain can actually do. And that's kind of like where I am thinking. Ben, I can't hear.
I was just saying, Rob always doing his homework. I
got a lot of time on my hands.
I saw like a Fortran on your list. When I did an internship like 10 years ago, I had to do it in Fortran. I had to take Fortran in college, and I remember taking it like, why am I having to learn this stuff? No one uses Fortran anymore. But it turns out some of the government institutions, they still use Fortran because a lot of the old stuff was written in that code, and they don't want to like recode it into new stuff.
Oh,
they still run it in Fortran, and Fortran like 77.
See, and then we're still using these legacy things. Then as we move forward, we're going to move different things. So whatever people think is going to be like the big winner now, I don't know what's going to be the big winner later. We'll find out. That's why I diversify, because I can't figure it out.
Well, that was a great answer. Guy, do you have anything to add to that comprehensive review that Rob provided? I think that's great because it really does show you how we can get super focused on one sort of outcome and think that, hey, this one's gonna, these are they're gonna die away. They're never gonna overtake the higher spots. But you can see as the years go on, things change.
Yeah. One thing I will add to what Rob was saying is a lot of that made me feel really old because I can remember. I remember the AOL CD as well. That's brought me crashing to earth. I think and if you apply this to crypto, and I wonder whether that process of that you illustrated so beautifully, Rob, with those with scrolling through those videos, you see things sort of you see things take this huge lead, and then suddenly they start getting pinned back, and these other things come up on the rails. I wonder whether that's going to be an even faster process in crypto because it just seems like such a kind of an industry that moves at such a breakneck speed in so many ways. And I think, 95, maybe even 99% of all the cryptos out there at the moment are either completely worthless or, don't have strong enough fundamentals to survive into the future. But I think there's certainly room for a lot of consolidation stuff. Will we see consolidation in the layer one space, for example? This is a question I often ask myself. How many layer ones are we going to need? Like, leaving aside the question of layer twos and all the stuff that you can do with them. Are we going to need as many layer ones as we have now? Are we going to need all these different ones? Is Ethereum just going to keep dominating market share? So I think we could see definitely a lot of consolidation in that space. I think an interesting sector that I've been sort of looking at recently, because a few people in our Discord have been talking about sort of various decentralized storage protocols, for instance. This is part of this deep-in narrative that's big at the moment. Decentralized data storage, it's not the most glamorous or sexy little crypto niche, but it's hugely important, not just, and even more so because of the advances that we're seeing with AI, which needs a lot of data. So this is something that's that's only going to grow. And at the moment, I remember Filecoin. Filecoin came out, that huge multi-million-dollar ICO, and is still a big player in that. But then you have competitors. You had things like Arweave coming up, but now there seem to be sort of more and more. We covered one called Jackal Protocol recently, which is fascinating. There's another one called Shadow Token, I think. So there are all these different ones. Now, are we going to need lots of different types of decentralized storage, or are we going to see consolidation in that sector? And you can expand that to kind of every crypto niche. And I think perhaps that's what we'll see in the future, is that we will see consolidation. We will see projects maybe combine their tech to provide a much better solution together than perhaps they can provide on their own. Whether that comes at whether that sort of compromises decentralization, I think is another big question. That's something that's always kind of forefront in crypto. And to your question, Ben, whether will we see sort of companies issuing their own cryptocurrencies? I think possibly. I think what we could very well see is a huge growth in stablecoins. I think a lot of companies, from what I hear, are looking at what PayPal's been doing with PYUSD, and are looking at the stablecoin model more generally. I mean, you only need to look at Tether to see, the billions of dollars in what is essentially passive income that it makes every year, to go, yeah, that's not a bad model if you can get it right. So I think perhaps company-specific stablecoins could definitely become a big thing in future. So I think we'll see more of those. Whether or not actual companies will issue sort of actual cryptocurrencies, I'm not sure. A lot would depend on what sort of utility and interoperability they may have. But yeah, I think over time we will see that consolidation process happen. But there will be, there's just so much more stuff coming down the pipe, isn't there? Already people are saying, we covered Celestia yesterday. We did put out a video on that. And, there's already talk that maybe it's modular blockchain architecture. People are already saying, well, maybe this is a better solution than so-called monolithic blockchains that the likes of Ethereum and stuff like that. So we're already looking beyond that. But then, of course, Ethereum is got these upgrades coming. Denkun is gonna sort of really optimize in that regard. So, but there always seems to be the likelihood of another smarter, more a solution that can be sort of more easily implemented coming down the pipe. So it's certainly not going to stand still.
Yeah. And then I have one thing to Guy's comment about Celestia. If you haven't seen that video, the backstory behind Celestia and the founder of who actually created it, it's one of the guys that hacked into the CIA, right? CIA or FBI. And just watch that and you're like, well, that's the guy I want to actually build a blockchain. That was a great video, Guy.
Thanks, man. It was fascinating to research it. It's a really interesting project. The tech is pretty high level. It took a lot of getting to grips with, but yeah, even the backstory of it, as you say, is fascinating.
Mm-hmm. Cheers. That was a good one.
Yeah, I mean, it's interesting to hear your guys' thoughts on it, but thank you guys for those very well thought out answers on that question. The next thing is, we did have the spot ETF stuff that kind of finalized with Bitcoin just a couple of weeks ago. And I know, Rob, I saw you tweeting about it a little bit. The flows look healthy to you. I mean, I know there's some outflows from GBTC. Do you think that's what's kind of holding the market down?
Start with Guy, because he had a comment, and Guy, you had a comment that just came out on X, your X account, about the flows. That it's like it's just catching up or something like that. And I glanced at it. If you could cover that.
Sure, yeah. Guy, what's your opinion here? Because I've seen some people say that there's a lot of flows leaving GBTC, and sort of overpowering all the inflows in the other ETFs. I've also seen some people say that they're just moving Bitcoin around, not necessarily selling it. So I'm curious where you stand on this.
Well, I think a really important thing to remember with the to remember with the flows. I mean, we tweeted out earlier that they were, they're sort of starting to slow down now. Obviously, they've been the big kind of, the big drag on the market since those ETFs were released. I mean, I think what's important to remember when it comes to inflows into all the ETFs and outflows from GBTC, from Grayscale's product, the outflows from Grayscale are finite. There's a heck of a lot of Bitcoin under management there, but it is a finite amount, and sooner or later, probably sooner, I think, that selling is going to stop. Now, one of the questions I keep asking myself is, well, why is Grayscale letting this happen? Why doesn't Grayscale lower its fees? I mean, its fees are like, was it 1.5%, which is way more than what any of the others are charging. I think it was the guys on Castle Island Ventures forgive me if it wasn't them, but I think it was them speculating that, I guess Grayscale are banking on the fact that a few people won't really care. They'll be pretty disengaged. They bought GBTC ages ago and they just forget about it. They don't really care. So they'll just leave it in there and they can harvest fees off them. Whether or not that's really going to be the case, I don't know. But my point is, that the GBTC outflows will come to an end. Maybe in theory they could empty out the whole fund, but in practice they almost certainly won't. Inflows, on the other hand, they may be. They have been net higher than the outflows, but those inflows are going to keep coming. Maybe the rate of them will slow and speed up, for whatever reasons, but those inflows are going to last, indefinitely into the future. Whereas GBTC will reach an unwind point at some time. I have heard speculation that Grayscale is planning to launch another Bitcoin ETF in the future. I think Michael Sonnenschein, the CEO, was interviewed recently and was asked this and wouldn't directly confirm or deny it, which I think was kind of fascinating. So I think it's not something I think that's too concerning, and those outflows will trickle, slow to a trickle, I think, fairly soon.
Also wonder, I'm curious if any of the inflows into other ETFs are a result of all the outflows from GBTC, like maybe people just sort of moving around to another fund that just has much lower fees. I wonder if there's any element of that going on. Rob, what's your take on all this?
Yeah. First of all, I always like guys' answers because they're always so in depth. That's why I watch this show. But for that information from the outflows to Grayscale, I'm not for sure, but I keep seeing this about the wash trade rule, right? You can't get back in after 30 days, within 30 days. I know that that's for traditional equities, not for cryptos, but this is an ETF. So I suppose that is something there. But I will just defer again to this tweet from Guy at Coin, who's sitting right here. He put out a tweet that said, "Hey, outflows from Grayscales are slowing down," and that's what we want to see. But it has to be that way. But again,
do you want me to share your screen there?
Oh yeah, if you would please. If it has to be that way because Grayscale has a lot of. I hate to say it like this, but it is what it is. It's there's a lot of cancer in there, and a lot of those cancerous cells are from FTX, and those guys have to purge everything for us to get to that next level. This is the last, I think, the last step before we can move on from the nonsense that happened in 2020, 2021 to get to the next level. So this is, it would be concerning if we had dropped off a boatload of price action, but there was this really good chart. Money flow per fund after 8 days. Look at Grayscale Bitcoin. Grayscale. That's a lot. But if you're looking at this, people have to get out of there. Just like Guy said, the fees are crazy. FTX has to dump off because they have to pay their creditors if that's ever going to happen in this millennia. And then all the different things that people are like, I don't want to pay these ridiculous rates. So even after all this nonsense, imagine if we just X'd out of Grayscale and how far ahead we'd be. It'd be pretty damn far. So I'm really, at first I was a little concerned. I was like, this kind of sucks. But I look at these types of things, I'm like, yeah. And then credit to James from Invest Answers for rolling out a nice chart. I just want to give him a shout. Remember those days, Ben? Me, you, James, good times. It was always me, Ben, and James, and I would just sit in the background and watch Ben and James go at it. It was fun times. So yeah, that's essentially, I look at it, I would have been concerned if it wasn't for the fact that, yes, we did drop, but we were able to sustain and maintain. I think in the next 6 months, 8 months, 16 months, we're in the right place at the right time.
Yeah. Yeah. Well, yeah, those are some good old days. Well, DCA live, right?
Dude, those are fun times.
Wow.
Those are good times, man.
Yeah.
But this is a great show. I like the perspective. I like how we all kind of differ in our investment strategies. You know, I'm more the degenerate, and you guys are more the stability. So thank you for balancing me out.
Yeah, that's a good channel too. James Invest Answers.
Yeah.
Next question. So here's kind of an interesting one, because and maybe it just sort of goes back to what we just spoke about. Traditional markets are making new highs, right? I mean, like the S&P, the Dow Jones, the NASDAQ, all making new highs. Crypto's kind of stuck in traffic right now on Struggle Street. And I guess the question is well, is it just because of this, the GBTC stuff? Like, do you think that once the hangover from that is over, that crypto will be lifted higher again as traditional markets go higher? Or, are we deviating, right, from the other markets? I think last year there was definitely times where Bitcoin was going up and the S&P was kind of like going down or not moving at all. Now it sort of seems like the reverse of that. But do you guys think that that crypto will pick back up here over the next few weeks if the S&P and other traditional markets stay strong? Guy, what do you think?
Yeah, I mean, the correlation of stocks and crypto last year was at its lowest level, I think. So there does seem to be a divergence in that regard. And crypto now seems to have now that we finally got these Bitcoin ETFs, and of course we're talking about many more, which may or may not come later this year in the case of Ethereum ETFs. But it does seem to have that momentum, and it also seems to be more correlated with small cap stocks. The Russell 2000. So I think that's something to bear in mind. There's also, I think, when you look at these major stock indexes, this I think what's worth noting is this huge concentration in the Magnificent Seven. Nvidia, Apple, Alphabet, Microsoft, etc. And that is something that does sort of weigh on my mind a little bit, because if there ever is a downturn, if there ever is kind of selling, and there becomes, people need to sell off, then so much, a ridiculous amount of money is held in these particular 7 stocks. So I think, there's kind of a centralized risk there, if you like. What would happen if we saw a sell-off of those? And it suggests to me that the stock market in general is perhaps not as strong as it may look on at first glance, because of this real top-heavy concentration. Yeah, I think I do get the sense that crypto is kind of doing its own thing at present, and I think probably could well continue in that vein.
It's kind of interesting because it sort of seems like it's similar to crypto, right? Like, where you're right, like the Magnificent Seven has been doing very, very well for a long time and has been lifting the market up. Kind of similar thing in crypto to some degree, right? Like, Bitcoin has certainly been more of the talk for the last year as it's regained market share. And so it's kind of a similar pattern across different asset classes, where it seems like, sort of the higher market cap, mega cap stuff is doing very, very well and sort of lifting everything else up. Rob, what is your thought on this? I mean, the Magnificent Seven has been incredible. I mean, I guess Tesla fell off a little bit recently, didn't it?
I think it went below 200 or something like that.
Okay. So yeah, I mean, but I mean, most of them have been doing pretty well. Like Nvidia just keeps on going. I mean, it's been a sight to behold, to be completely honest. Google, Amazon, they've all been doing pretty well. So, I guess how would you take that question? Do you think that this is a sign for things to come in crypto, or unrelated?
No, I never thought of it like that. Like when Guy was talking about, the lower caps and the Magnificent Seven, I just thought about it. I thought, that's a good point. And then maybe it's just how we do things here in crypto world. Not everybody, but we tend to like the major market caps, the Bitcoins, the Ethereums, the Solanas of the world. People will ride those up and they'll start to take a little bit of profits. Not everybody, just the degenerates. And they'll kind of go into these lower caps. Maybe that's what will happen in the market itself, but not everybody. I think they look at this and they're a little bit more stable than what we do. But I can see how it could work out and go that way. But I was looking at I was stealing information from your website again, Ben. It was I took a look at the Bitcoin price and the S&P 500 and overlaid it with the M2 money supply on your workbench. And I can just tell you, like, everything kind of flows with those three things in tandem. And I'll show you. It's just like, I mean, people will say, the market doesn't matter. The market matters. If the market crashes, there's going to be problems with the more riskier assets, which is, I hate to say this is Bitcoin is a risky asset. But if things go up, then
that's blasphemy to a lot of people, Rob.
What's that?
I said it's blasphemy for a lot of people to say such a.
Yeah, well, I'm not saying it, man. It's just this is what the data shows. So, like, when I take a look at this, I'm like, I hope the market goes up, because it would be a little bit of difference with if the market crashes and Bitcoin goes all the way up. I know people believe it, but I'll believe it when I see it. And I agree with Guy in that last piece.
Well, one thing that we've kind of talked about for a while are these nebulous, never coming rate cuts that just they're constantly kind of pushed further and further out. Maybe one of you guys could pull it up, the CME. Yeah, Rob's always prepared.
Because I know you're going to ask this. I know you're going to ask about CME.
Can you go over to the probabilities really quick? That little tab on the left. Yeah. So it's really interesting because, for a long time, their first rate cut was going to be in March. Now it seems to be shifted towards May. I almost wonder if this is going to be sort of the market that cries rate cut. So by the time the rate cuts actually happen, no one's going to believe it, because it just keeps getting pushed further and further out. So I guess my question is, do you think we're going to get a rate cut in the first half of the year? Because it certainly seems like we're not going to get it in January, maybe not in March, perhaps May or June. What do you guys think? Rob, you want to take a stab at this one?
I'll take a guess, which is essentially what it is. I just defer to this and say, it looks like the market believes it's going to be roughly 50-50 in March, or more so it's going to be in May. So I'm not for sure, but let's just shoot for May and go from there.
Sounds good.
I don't know.
No, I mean, I don't know either. It's really hard to say exactly. I think it's sort of a game of chicken. Like the Fed wants to probably cut to help ease the pain on a lot of businesses, but you just have the S&P. I mean, when you have the S&P just soaring to new highs, I guess they're a little cautious. Guy, what do you think? I know you've expressed some opinions previously about rate cuts. Do you think they're going to be able to get a rate cut in by May?
Yeah, it's interesting that it's been put back now, or at least the CME has put it back till May. I think we're gonna get a very good indication in about 1 minute's time, because I think the GDP figures are due out any moment. Your end, so that's going to inform a lot of it, and then PCE is tomorrow, I think. So maybe ask me in 24 hours time. But I mean, you have still got economic indicators, kind of still looking fairly strong. But also the prospect of, inflation is being talked about as maybe flaring up again because, I think the what's happening in the Red Sea at the moment, that's got a lot of people worried that it illustrates just how fragile the system is, isn't it? You only need one disruption to that. You only need ships having to go an extra 10,000 miles or whatever it is, and suddenly, the prospect of inflation, starts to creep back up again. So we'll have to watch that data very closely. I think from the point of view of the Fed, I think they, it's in their interest really to try and give a hawkish stance to this because they want to keep inflation expectations in check. So I think it will be interesting to see what Powell has to say in a few days' time and what his general sort of demeanor is going to be like, because I guess they don't want to dangle rate cuts or to be seen to be, leaning heavily towards rate cuts only for the markets to sort of pick that up, run with it, get completely overexcited, and then for inflation to come back. So I think they want to keep, it's in their best interest to try and keep in expectations of inflation in check as much as they can. So I wouldn't be at all surprised if they do sort of try and give the impression, that maybe, we are still looking at those rate cuts this year, but it could be May, could be, I can't remember if there's a meeting in June, but I think there's a good chance they may well try and keep pushing the date back a little bit to keep those expectations under control.
It actually looks like GDP came out an hour ago and it was at 3.3%. So actually higher than expected. I think expectations were like 2%.
Wow. Look at that.
So yeah, 3.3% in Q4 annualized.
Okay.
So yeah, it came in higher than the market was expecting by quite a bit, actually. So
I wonder how that's going to be reflected in crypto.
Yeah, I don't know. I don't know when Satoshi reports earnings, but I guess yeah, no, it's definitely brilliant. Last question. I'm curious. We're all investors. I'm curious. I know you guys make a lot of investments. What's been the best investment you've had over the last 6 months? Rob, you got your screen.
Sorry. I was getting this ready. So over 6 months, before I answer this question, it's obvious. I just want everybody to know that I held a lot of Bitcoin, a lot more than anything else. And then I've got a ton of S coins and a lot of really S coins. So when I answer this, just don't feel like, oh, Rob just must be a straight up degenerate. But in the last 6 months, the best performing asset I've had was a meme coin called Bonk. So it was just one of those things where, like, I've got a buddy here named Steve. He owns the San Juan Smokehouse. And he's big into the Solana ecosystem. He goes, this one's going to be good. And I was like, all right, I'll throw some, because it's just a gamble. It's just gambling. It's not like he told me that this has a great community and it's going to change the world. He's like, this is a good gamble. I was like, okay. That over the last 6 months has been the best. Now, having said that, I still dollar cost average every single day. It goes off without a hitch. It's the Bitcoins, the Ethereums, the Solanas of the world, Celestia, because of Guy's video and some other stuff. So it's crazy to think about, but that's just, if you're okay with the fact that it's a gamble, that's what it was. So over 6 months, it was a meme coin. Crazy.
Nice.
Well, the meme coins always are an interesting part of the cryptoverse, that's for sure.
They are.
Guy, was it also a meme coin for you?
No, if only. I wish I had Rob's degeneracy.
You don't want it. You don't want it, Guy.
Oh, guys, by the way, if you have any questions for us, put them in the chat while Guy is giving his answer.
Yeah. I don't know. I've looked at. I keep seeing these meme coins come up. I keep seeing them referenced, and I always talk myself out of it. And so often, it's one that does actually catch fire and go crazy. And you think, if I just put $500 in, But anyway, so I mean, in terms of the last 6 months, the best performing asset in my portfolio has been Bitcoin. In terms of sort of recent investments I made, I think I bought some Solana, not at the absolute bottom, and obviously once the sort of rally had got going, but that has since performed pretty well for me, so I was pleased about that. Another one that's done well, has done better, but has retraced a bit recently, but I'm still nicely up on it, is Pith Network, this Chainlink competitor. We were very bullish on that when we reviewed it for Coin Bureau Club members, and I think it's one of those projects that's got a lot of potential. So it's kind of like it's kind of neither here nor there really, that it's done okay for me in the short term, because it's a very long term hold that I've got it for, but it makes me feel smarter than arguably I am when I look at it and go, I'm up on that, because I'm not up on everything that I've bought recently, and that's putting it mildly. So yeah, Sol and Pith have been pretty good of recent investments, but yeah, Bitcoin makes up the majority of my portfolio. Well, not the majority, but the largest overall allocation. And I mean, that's been a joy to watch. So yeah, those three.
All right, good answer. I mean, Bitcoin is the only.
I know. I was just wondering if you're like, I just thought you're gonna like throw out something like, I put a bunch of money into Pepe and it was my best one, but I couldn't catch it. All right.
I suddenly thought dog with hat. That makes sense. I'm going all in. So, then sold his Bitcoin and got into dog with hat.
Dog with hat. I laughed, but it actually did tremendously well. But again, for you to win on those plays, someone's got to lose. So just everybody remember that.
Yeah.
My crypto portfolio. Go ahead.
You only hear about the winners. You don't hear about the losers.
Right.
Yeah.
I mean, I do have some like random bags of altcoins from prior cycles that I don't even know how they're honestly doing.
Yep.
But yeah, like the only thing I've bought in the last like year has been Bitcoin, at least in terms of crypto. I buy like index funds, but the index funds haven't outperformed Bitcoin over the last year. So yeah, I guess I would just say Bitcoin for me. All right, let's get to the questions. All right. Let me go through these. All right, someone's Phoenix says, are any of you buying the ETF or just strictly sticking with direct asset buying?
I won't be buying the ETFs. I don't see the point. I haven't been in crypto for as long as I have to be getting exposure that way. But I mean, yeah, I can understand the rationale for it for people who are new to crypto or unfamiliar with it. But I think if you've kicked around this space for a while, you know what you're doing, then direct buying, buy the asset directly and then transfer it to your own wallet, and that's it. That's all you need to do. I don't see the need for BlackRock to look after it.
Yeah, same thing. I mean, I get why people do it, but it's not for me.
All right, you guys were talking about this one earlier, this altcoin, Celestia. What is your experience? It says, my experience with this is low fees but high latency. Will it be able to reach low latency too? Do you guys have an opinion on that?
This will be a guy question.
Yeah. Well, I mean, there's obviously a lot of development work happening on Celestia at the moment. So my initial answer, I'd have to dig into it a bit more, but my initial answer would be yes. I think they're always looking to optimize it. But yeah, I think it's definitely worth watching out for that sort of thing, because Celestia, I mean, and there are so many projects that are looking to build on Celestia, and if it wants to maintain that sort of prominence among the modular blockchain, in that modular blockchain space, then it will have to offer the best experience for anything building on it. So yeah, my guess would be that they will be looking to solve that as quickly as possible. Yeah.
Here's my question. I wonder how slow it actually is, for it to actually go from one wall to the other. Because we're so spoiled here in the crypto space because we think like, hey, this isn't immediate. What the heck is going on? But if you I mean, I still have to work with banks and things like that and do wire transfers. I mean, you're looking at, 24, 72 hours. And of course, there's a fee along with that. And of course, if it's on the weekend, forget about it. So I look at this, I'm like, I mean, I know it's a little bit, but I mean, I think we really are spoiled in this sector. So they probably do well at some point.
Well, that's what we're here to fix, isn't it? That's one of the stupid aspects of the modern financial system that we're here to change. I had to do an international bank transfer the other day, first one for a long time, and it just reminded me. It's like, why? This is crazy. I could do this with USDC in seconds on Solana or something. It's crazy.
Exactly.
Christopher wants to know what our thoughts are on MicroStrategy. I don't know if you guys saw this, but it actually dropped quite a bit basically since the spot ETFs were launched.
Because it's correlated with the ETF and the price of Bitcoin, maybe.
Yeah, I was trying to figure out is it dropping because the price of Bitcoin's dropping and it's basically just a proxy to Bitcoin, or is it dropping because people who previously wanted to get exposure to Bitcoin who couldn't buy it, through say like a brokerage can now just go buy the spot ETF instead and get the direct exposure. I don't really know the answer, honestly. I feel like if Bitcoin were to go back up, then MicroStrategy would probably go up with it. But I think that's still kind of a question mark of how it's going to perform. You guys have any thoughts?
I'm just curious as to what this is something I should look into really, but what MicroStrategy's, core business is beyond Bitcoin. I mean, obviously it's a software company. Is it still, I presume it's still sort of pretty profitable from that basic product that it does, from its software products and whatever other services it offers, quite aside from Bitcoin. I mean, I guess it could have also dropped because Saylor announced recently that he was selling off a bunch of stock, wasn't he? In order to, guess what, buy more Bitcoin. So I wonder.
Not Saylor.
Surely not Saylor.
Surely.
No, he wouldn't. But I can understand why it's a proxy for Bitcoin. But again, like the ETFs, I don't see why, it seems an odd way to get exposure to it. Why not just buy it yourself?
I don't know, man.
Bitcoin.
But I always thought it was interesting because MicroStrategy is data analytics, right? Software company. This is the MicroStrategy chart for 5 years. Didn't they start buying in 2020?
Yeah, late 2020.
And then look at that stock price. It's a pretty good move. But before that, let me max out.
Yeah, it's one of the craziest charts you will see.
So when people ask why'd they do that? Why'd they do that? There's a reason for everything. That's all I'll say.
I mean, that peak from the .com era, having gone so much higher than it just went with it's a crazy looking chart. I don't feel like there's that many charts that look like that, There's also not that many companies that pivoted their entire strategy to buying Bitcoin. So maybe that's one of the reasons why it looks so much different.
Yeah, hats off to Michael.
Yeah, I mean, what else do we have here? Let's see. There's any other questions? There's some questions about some of the altcoins. Someone asks about AVAX. You guys have any thoughts about long-term value in Avalanche?
Avalanche seems to be carving out. It seems to be kind of the subnet architecture that it has. That's some of those subnets are doing pretty well. And I think there's a lot of talk about gaming, a lot of GameFi projects using Avalanche subnets. So yeah, I think it's a realistic competitor in the layer one space. And if it can capture a particular narrative, then I think like it could maybe do with gaming. Then I think it could be a good one for the future. Yeah.
Yeah, I had Ed Chang on. He's the head of gaming like a week ago, and we were talking about it. And this goes back to the very first question about how people would say, do we need 1,000 different cryptos? No, we don't. But there's different cryptos for different things. Just like what Guy talked about, those subnets. For these things to actually work fast, Bitcoin's great. And layer 2's on top of them, God bless them. Let's see if they can work out. But AVAX makes it pretty blindingly fast, just like Solana does. And with the subnets, they can actually put a game on there for microtransactions and actually work a game. So again, it's the difference between Web 1, Web 2, and Web 3. You can actually own the different things that you have. And if you've seen the games lately, and again, we talked about this yesterday, Off the Grid and Shrapnel are fantastic games, and also they're hooking up and making partnerships with a lot of the esports communities. So I know people will say like, well, the Web 2 hates Web 3. They don't. They hated it because it sucked 2 years ago because it was pretty much a cash grab. And now that the games are actually good, people want to play them, and the esports are actually coming in saying, we'd like to be a part of that. You're going to see how the narrative is going to shift, and Avalanche, I think, is right there where they should be.
Yeah, I think we just covered. I was just making a video earlier. Binance Research did a pretty comprehensive sort of look over, the last year or so in crypto and looking ahead for 2024, and they were pretty bullish on Avalanche. And they said, I think the Shrapnel subnet was kind of singled out as a one to watch. Meld as well, which was
Meld, the DeFi bank. Ken Oling and the crew, excellent.
Yeah,
good luck staking on there because their staking pools are always full. Sorry,
Connor wants to know what you guys. Let me rephrase this question because it's impossible to know which coins are going to go back to all-time highs. But I guess the question is what are your thoughts on Polkadot and Chainlink? Link, I think Link has had a bit of a good move over the last few weeks. Dot, I've noticed, has been one of the weaker performing ones. I don't know if you guys have sort of seen that, but there's a lot of altcoins that are several multiples off their lows. Dot's only like 2x off its low, so it seems like it hasn't made as significant a move. But I'm curious, from a fundamental perspective, do you guys have any insight into either of these two?
I know Polkadot is going through a big upgrade at the moment, Polkadot 2.0. So I think that's a potentially big move, and I guess Polkadot's sort of main competition, it's kind of lumped in with L1s like Avalanche and Cardano, etc. But I think it's more a competitor to Cosmos, because it's this idea of sort of sovereign chains that leverage the main Cosmos hub or the Polkadot main chain for for security and what have you. They're kind of, Polkadot and Cosmos are kind of layer zeros. So I think maybe Polkadot's sort of big issue is whether it, how much it and its ecosystem can compete with what's happening in Cosmos. And if you look at Cosmos has just been going crazy lately. Atom itself has done nothing, but Celestia is a Cosmos project. And there's tons more. I was speaking to Crypto Cito. We had him. He visited here at the Dubai office yesterday because he's based in Dubai as well. He came a couple of days ago. And, he was telling us there are so many projects coming out, still in development in Cosmos, coming out over the next, sort of few weeks and months. Injective is another one that's been big in Cosmos. So can Polkadot compete with Cosmos, and can its ecosystem, generate the same sort of excitement? I think if it can, there are some really promising projects building on Polkadot. But I think it needs to come up as an ecosystem. If it can sort of generate the same sort of hype at some point in the cycle that Cosmos is generating now, then yeah, sure. I think DOT could go back to an all-time high. Although, again, compare that with Atom. Like I say, Cosmos projects are doing amazingly, some of them, but Atom itself has been sort of fairly static recently. Is DOT going to have the same problem? I think that's definitely a possibility. So I think Polkadot has got a lot of work to do in that regard. But there's no reason why they can't pull it off. Link, I think, Link has seen a ton of development recently. But one of the reasons I liked Pith Network, because I think it's a good, it's a good competitor to Link, to Chainlink, and I think it's got in many ways perhaps arguably better tech. So I think Chainlink can definitely, I think, see new all-time highs if it keeps sort of developing. But there's serious competition there as well. Sorry, that was a very long answer to what should have been.
That was a great answer. I'd be doing a disservice to add anything to it. Excellent. Now it makes me want to go buy more Pith. Thanks, Guy.
I shouldn't shill my own bag. Sorry, that's terrible.
Frank wants to know if we've looked at what effects rate cuts have had on the economy before 2000. There are plenty of examples where rate cuts have not ended with a downturn in the stock market. What are your thoughts? Yeah, I think there's, I guess the last few times it did end with a downturn, but there's examples from like the 70s and the 80s and other years where rate cuts did not correspond to a downturn in the stock market. You guys have any thoughts related to that?
Yeah, we did. I mean, there's this. I always show this. I mean, it's not. I mean, there's a window that pops up. It's just between like the different time frames that it goes over, and it's right. I mean, before 1980 or something like that. For the 80s, there was a couple of times when we had the rate cuts, it didn't really do anything. But if we take a look at just over time, between a pivot and then a recession, it takes like 2 to 3 months. So rate cuts, pause the recession, or pivot to recession. It's always been the same thing going forward. But if we want to take a look back, sure you can. But recently, over the last 25 years or so, it's pretty much the same thing over and over again. So will this be the same deal again? Only time will tell. I think that we've already uninverted a little bit, and we came back down. So it's anybody's guess.
Probably depends on like why they're cutting. That's if they're just cutting, out of the goodness of their heart, and
right.
Yeah. But I mean, like, let's say the market isn't dropping, and in May they just decide to cut like 25 basis points. I mean, they're clearly going to try to achieve a soft landing, and there are examples in history where 1967 is an example of a soft landing, where we had a yield curve that was inverted, but we ended up the stock market didn't drop considerably after the uninversion. We did get a recession, but it took another 2 years for it to arrive. So yeah, I think there's relevance to think about, hey, there's plenty more examples than just the last 3. It's worthwhile to consider those outcomes too. I think that is it. I don't really have anything else. We've gone through a lot of the questions. We've been going for about an hour or so.